What's up, guys? For today's video, I want to go over how I make a list of small account tickers, to watch on the weekly, but mainly to use this list as what I talk about, really getting to understand 3 to 5 tickers and be able to trade them every single day. That's something that's been really big for me. How I did this for my small account and how now being able to use Flow, it's a little bit easier because we do have that volume and we can see that. I also want to go over, my PayPal story more in depth, kind of focus more on how I overcame this ginormous deficit in my account, and then was able to make PayPal one of those tickers that I've learned pretty well and have been able to trade pretty successfully for the last month and a half, 2 months now. For the next part of the video, I want to go over how to go about learning a ticker. This is something that I talk about those 3 to 5 tickers you could trade any day, but how exactly do we learn these tickers, right? And then lastly, a pretty cool announcement that I have along with Commish. Just kind of want to get that out there, let you guys know what we're planning, and it's something I'm really excited and looking forward to. When it comes to making a list of possible small account tickers for these 3 to 5 to focus on, the place I start is hot chains and tickers here on Unusual Whales. And the reason that I start there is because we need volume in order to trade. So basically what I do is I go and I look through those first 50 to 100 names. I'm trying to stay around that $1 premium area, $1 to 0.75, 1 to 2 strikes out of the money, just because I don't want them too far out of the money where I have to chase a little bit and then our returns are diminished. But I also want to give it enough space so that we can maximize our returns. So I know right away the Apple, Teslas, Nvidias, AMDs, the Netflix of the world, these are going to be really high premiums, and for a small account, we can't play those unless they're crazy out of the money. So I'm going to just use Ford for an example here. Ford, what I do, I click on this See Today's Breakdown, and then I'll just scroll down here and look at these most active chains. So the finishing price here on Ford was 20.65. So I'm going to look for the 21 calls and 20 puts, 20.5 puts in this case, as it does work in 50-cent increments in terms of contracts. But I'm just going to look at this, and I'm going to look at these bid-ask prices and see where they are. Are they crazy, unreasonable, or are they pretty nice where we don't have to play too far out of the money? So that's kind of the process, and I just repeat it for multiple tickers. But in order to save some time and also give you guys a little bit more time, I have gone ahead and just made a list from this week's top 50 to 100 tickers that have pretty nice daily range, and their bid asks are around that $1, a little bit lower for both calls and put side bid ask. Some names that maybe this week you want to focus on really trading 1 to 3 tickers and really mastering these tickers. This is a good list to start, especially if you are a smaller account. Alright, so as some of you might know, PayPal is my biggest loss to this day on my account. So what happened was I initially bought calls here, trying to play this gap fill, right? And the first problem is I bought 300 calls, I believe they were. So I had weeklies, right? Big bullish candle, pretty nice, whatever. The next day we had this candle, nice. I held on to them, kept holding. We reached Thursday. The price reaches a high of 288.9. At 300 calls, probably not going to expire very well. So I decided to sell them off. At this point, they had gone down I want to say 85%. And originally I was up about 25% from the initial buy-in spot. So I could hold. I thought I was going to be profitable. And at this point, I'd been trading penny stocks about a year in advance. And I never really shorted anything, so I didn't really know how to play the downside. That was one fault. Secondly, buying weekly expirations with absolutely no risk management was my second. And third, I was stuck in this mindset that stocks only go up, right? And with that mindset, it really deteriorated that trade and also my account. At the time, the account was about $1,000-ish or so, and I ported about 75% of my portfolio solely on these calls. So it blew up my portfolio big, but how I was able to bounce back from that was, first off, I had to realize that stocks don't always go up, right? I need to come in each day with an unbiased opinion and just play price action. Play what the stock gives me, play what the market's giving me, and be confident and not greedy, right? So the big killer there was the greed. Now I was shooting for that 50 to 100% range right in here. My initial target was the bottom of this gap, which ended up a couple days later hitting it, but my calls would have expired right here, September 3rd. So, they would have been nowhere near profitable, nowhere near in the money. But my initial thought was, this gap fill, cool. What I took away from it was, I need to be able to trade price action, right? And it created a big rule for me, which was to never overnight, especially weeklies. I will never overnight weeklies just because, time's not on our side, and it also blew up my account. So while it was my biggest loss, it really helped me with developing my risk management skills. And because of this, I think that's why my journey really turned around, was just because, I experienced the bottom of the bottom. Blowing up an account is not fun at all, and it really messed me up. When it comes to the mental side of how the hell did I come back from losing all that money, right? It was more, on that day I decided PayPal absolutely blew up my account, but I'm going to learn how to trade PayPal, and I'm going to master this stock. So from then on, I really focused, how does PayPal move? How does it move in reaction to the market? What's the overall trend? Where are some points that could be big support and resistance, and I can get possible big plays out of? The way I was really able to overcome this and conquer PayPal again was to start making a system built on rules and make sure I followed these rules. And this is a big reason why I've been able to turn PayPal from my absolute nightmare to one of my favorite stocks to play, was really just following these rules, trading price action without a bias. The bias up here really defeated my account, and it's something that I strive for every day, especially when creating watch lists. And it's the reason why I incorporate both sides in my watch list. And I want to trade with this unbiased opinion, right? I just want to trade what I see, which is price action. So that leads me perfectly, nice little segmentation here, into how the hell do we go about learning a ticker. For this, I'm going to use NEO. So NEO has become one of my favorite tickers to play right now, and it's for a lot of different reasons, right? But the first thing when I go about learning a ticker is I'll break it down on the weekly. I just want to see, how does it respond to certain zones? What's the overall trend looking like when it comes to this ticker? So for NEO, there's some zones I've marked here on the weekly. It respects the zones pretty well, as we can see. The next thing that I really take into consideration when looking at a ticker and trying to learn the ticker is what indexes is this ticker in, and what sectors does price action really go off of. And for NEO, those would be KWEB, it is a Chinese stock, and Tesla, the EV sector. That's one thing I really took into consideration, was how are these stocks moving and how does that affect NEO as a general in terms of its price action. When it comes to day trading, I'm going to stay on the 15 and the hourly, but if I were a swing trader, I'd be more worried about the daily charts and the weekly charts, as they're a little bit more time and these zones do mean more in overall. The next thing I really want to know when thinking about learning a ticker and how it moves is what causes the moves in NEO. And one thing for NEO would be, Tesla, the EV, moves it a lot. And then secondly, deliveries are a big catalyst whenever NEO reports their deliveries, right? So those are two things that I really kept in mind and was really able to kind of incorporate into my system when trading NEO, and really watch when trading NEO. Another thing with NEO is whenever Hong Kong gaps, tickers like BABA, Baidu, JD, tickers like that, NEO also tends to gap. So I would watch those, in the morning. If they did gap, then I can expect a gap to come out of NEO. Now when it comes to actually trading it and things that I want to look at and want to learn about a ticker are, what makes it move, in what relation does it move to SPY, as well as best times to trade it, and just kind of the personality of this ticker. So one thing that I've really noticed here recently with NEO, we'll go to the 15-minute chart, is that NEO tends to move really electric off the open and then just fades throughout the day, right? So let's see. This is 9:30 market open, January 20th. Nice gap up, and we continue, right? But we fade throughout the day. Same is true on Friday. We have a gap down, nice bounce back up. We get some retest, but it continually just fades throughout the day. This can be seen, 3 to 4 multitudes of times. Right here, nice little down, back up, fade throughout the day. Nice down, bounce, fade throughout the day. Cool. So based off of this, I could really, start to incorporate that. The next thing that I really take into mind is how does NEO move and how does it move in correlation to SPY? So, we talked about how it moves intraday, bounce and then fading throughout the day, right? But in terms of SPY, if we look at this chart here on NEO and SPY, SPY fades throughout the day. So does NEO. So based off that, we know that NEO does move pretty reliant upon SPY. So that's one thing to keep in mind. But if we also look at Tesla, which is the leader of its sector, it's very, very similar to Tesla. So instead of having SPY open, in this case, I'll keep Tesla open when I'm playing NEO. And this is just because I want to see, how the overall EV sector is moving, and this is the leader in the sector. The next thing I take into account when really going about learning a ticker is what's the intraday, how much does it move? What's the daily range? So for NEO, as we can see, it moves decent. There's some days where it moves, let's see, $5. Other days, it's around that $2 to $3. So most days I can expect about $1.75 to about $2.50 move. And I like that. In accordance with the premiums on NEO are nice. They're not too high, not too low. Going about learning the overall price movement and some levels on these tickers that we choose to play. For day trades, I'm going to start on the hourly and then break it down to the 15 and look at levels that have acted as both support and resistance. These levels here on NEO, and I'm going to do this every single day. I'm going to continually do it until I'm very comfortable with how NEO works, what levels are big the next day for support, which days are big, which levels are big for resistance, and how they interact to these levels throughout the day. Just looking at NEO here, 2805, big level, 2830 is another big level, 2852 and 2882, these come from over here a little bit. And then on the downside, we're definitely in a downtrend here. SPY is pretty weak. But on the downside, I'm about to even look back at this daily. So we had this here. Another thing that I look at a lot is, are there big gaps where I could possibly get a big play? And on NEO, there's a big downside gap down to about $20 a share. So that really excites me. We also have a complete gap right here from 21 to 23.75. So that's nice to see as well. If we can really move down further and SPY continues to be weak, is we could see a nice move out of NEO. Now comes to the actual day of execution and things I really look into. When it comes to actually executing the trades, I'm going to always trade off of the 5-minute chart. This just helps. Usually on the 1 and 3 minutes you can get a lot more chops and fake outs. But the 10 and 15 are often a little bit slow in terms of getting a really good entry, so I stick on the 5-minute at all times. So the first thing is, does NEO or whatever ticker you choose, does this ticker respect support and resistance? In this case, NEO most certainly does. We did have one fake out here in the morning, which isn't exactly the most crucial thing, but this was because SPY absolutely knifes down, and we can also take into consideration that NEO does move pretty well off of SPY, so that's something to really watch as well. And with Tesla, when it comes to respecting support and resistance, so it does respect these levels really well. This candle here's a nice little point. As we see, we have a shooting star candle and it fades, right? We have this nice little lower wick here, pretty long, followed by a big bullish candle and a nice little uptrend. So I do know that NEO does follow support and resistance pretty well. I also know that NEO can make these quick moves, which I like a lot, and I incorporate my personality into the stock's personality to really pick these stocks that I want to learn how to trade really well. Lastly, when it comes to the actual options side, I want to know, what are the bid-ask spreads? Are these spready tickers? And that's ultimately going to help me decide which tickers I want to trade and not. In terms of NEO, most times the bid-ask spread is about 0.02 to 0.05, which I can deal with. I like that, right? So I can get in and out of these tickers pretty quick. And then also, when we look at flow, let's see. NEO is usually one of the top 50 tickers, so I know that there's sufficient volume to get in and out really well. I have made that list, as I talked about earlier. It'll be attached to this tweet, but those are some things that I really look for when trying to master a ticker. The big things being, how does it move with indexes, and then also, does it respect support and resistance? What are the bid-ask spreads? How does it move intraday? And are there things in the personality of the ticker that I can really notice and maybe give me an edge to actually trading the ticker? The big question that's been asked is, how to trade price action, right? And so this is something I'm really going to hit on here, and it's something that can really help when it comes to trading both sides and also being a profitable trader. I'm going to use Snap here from my Friday watch list as an example of how I go about trading price action. So the first thing is, what the hell is price action? So price action is just how the ticker moves, how the price moves throughout the day. This also includes how does it react to support and resistance, how does it react to trend lines, how does it react to patterns. From my Friday watch list, my put trigger on Snap was 34.5, which it was respected very nicely here, as we can see. My target's at 34, and then through an intraday support at 33.71. So how do we know, which way a ticker is going, or help ourselves with possibilities of being right when a ticker, and really knowing how and when to enter a trade? And most of that comes with candles, learning candles, right? So one thing I really look to in terms of candle types is also volume. In this case, long upper wicks mean that sellers are stepping in, and they mean more at our key levels. In this case, we had this retest here almost exactly to 34.50 before it ultimately just dies throughout the day, right? So that's something we know that sellers are stepping in heavy here. So this could be a very good position to take a short here. On the flip side, when I'm entering calls off of a support bounce, I look for long lower wicks. The higher the volume, the more substantial and the more potential for this move to be significant, right? We need volume in order to move it up and keep moving it up in price or down in price. So the more volume we have, the more significant the move. Most bullish or bearish candle are going to be the engulfing candles, such as this one here. And the more volume we have on those, the more significant as well. Then after that, I look for, in terms of a short position, I look for a long upper wick. And in terms of entering a long position, I look for a long lower wick. The more volume, the better, as previously stated. And also, if we do have those upper wicks and it closes below our call trigger, right, this is a very good spot, very low risk spot to take a short position. A big question that has been asked and seems like people might be struggling with are avoiding the fake outs. And the only way we can really try and avoid these fake outs is to wait for a 5-minute candle close above or below our levels. This is the really best way to go about it. There's always going to be fake outs, and most of the times that is due to SPY, either knifing or just ripping. And that is one thing that we can take into consideration, and why I keep SPY open every day when I trade is just wanting to know where my ticker could either knife or break out, and it really helps with confirmation of entering into a play. Another thing to note on that, fake outs, they're gonna happen. There's no 100% way around that, but we can do our best to minimize risk, have risk management in place, and therefore, if it does fake us out, we take that little hit and then we get right back in maybe to that ticker or another ticker, and we're bouncing right back like nothing ever happened, controlling those emotions, but also managing our risk. Another big question is what happens if we gap? And for me, I always wait on the retest. In this case, Snap did gap down. We had a nice little hammer long wick candle here, and then we retested that 34.5 level before ultimately falling off. So I'm going to wait on that retest. If this candle, in this case, this was a little bit of a fake out. It closed at 34.52, which was right above our level. So you could have been faked out pretty quick there, but that's where having that SPY open helps. If we notice here on SPY, let's see, that would have been right in here. No, it's early. So that would have been right in here on SPY, right? SPY tests levels, hits it, and then we end up knifing, consolidating, knifing, same thing. So that's what happened. What helps when keeping SPY open and our overall ticker. So what I do in terms of the gaps is I always wait on that retest, and then I want to close either above or below that level. The question was asked, how do you know when to enter on a retest? In this case, maybe we don't play it here, cool, but we get this retest here, long upper wick, and then it keeps going down, right? Cool. So I'm really confident in entering a short position here because we do have that long upper wick, and SPY is also knifing in a very weak state. So this is a really good spot to take puts because first off, it was denied at our original key level. There's also a long upper wick showing that sellers have stepped in here heavy to defend this price level. Next question that was asked was about SoFi in particular. And what do we do when it comes to, remove these real quick, what do we do when it comes to entering a play if it barely retests super fast? My call trigger here on SoFi was 14. This tested 14.01 and then ultimately a massive bounce. So one thing we can use is VWAP. Most people use VWAP, and in this case it tests and it's above VWAP the entire time. So I can enter on candles that touch VWAP with nice longer wicks. Using VWAP with those candle types can really help when it comes to plays that just fly off. My favorite way to do that though is just avoid those plays. And the main reason being is that the risk to reward really isn't there for me, and I also feel unprepared when something just absolutely flies out, doesn't have a nice little consolidation, and then builds up or breaks down. On the flip side, if this were to be flipped and we get a close below our call trigger, say that SoFi, it gaps up, but this candle, let's see, one of these candles in here is the next candle. So we can enter puts here because we have this long upper wick and then it falls again. In most cases, that'll also retest that call trigger, so you can wait on the retest of that as well. It hits it and is denied. That's where we would enter if we gap up and then the call trigger does not stay, right? So we can enter there on puts with a close underneath our level and long upper wicks there, or a nice long bearish candle such as this one. It pretty much engulfs this candle here. Closes would say our call triggers, 14.09. Cool. It closes below our level, retests our level here, and falls off. So we can use that as well when it comes to entering the inverse of either a call or a put on a failed call or put trigger. The last question that was asked was about inside or outside bars. So inside and outside bars are simply, an inside bar is a bar like this where it's completely engulfed by the previous candle, and what this shows is that neither buyer nor seller are in control. And how we go about playing inside bars is we got to wait for a break. Right here we have this double inside and then it breaks up. Ultimately it knifes, but we could have taken a quick scalp here because it shows that those buyers are in control as they did push up. In strat terms, that would be a 2U. If it were flipped, it'd be a 2D. And then outside bars are simply the bearish and bullish engulfing that we talked about earlier. Okay, so right here is a 3-bar or an outside bar in terms of the strat lingo. But basically, an outside bar is a bar that completely engulfs the previous bar, and it shows that one side is significantly in control. They're also known as bullish or bearish engulfing. It really shows us that one side is in control. I don't play outside bars as much, but Young Ian Trading on Twitter, also Young Iverson, if you look him up, he has a really good thread on playing the inside-outside bar. He plays them almost daily, so that's something I'd really, if you're interested in inside-outside bars, I'd really recommend. But basically, the reason the inside bars work is because one side is trapped, and then we wait on the break either up or down. Down play puts, up we play calls, and that's basically just because one side's trapped, so then they have to cover, and then it ends up leading to a pretty explosive move in one direction. Another place that would be, fully exit is a close above VWAP. This shows that the buyers are back in control. It tests again, ultimately knifes, but VWAP, closing above or below VWAP is another way to exit, and all my exits are also taken on the 5-minute. When I'm in calls, I will exit or look to exit on long upper wicks around my key levels after that 20% scale. And then on the flip side, I would exit puts when there's a long lower wick near a key level. I keep it pretty simple with that. Basically, I just want to know, where are people stepping in and where are people stepping out in order to get the most money out of a possible trade. But one thing to keep in mind with that is we're never going to be able to buy at the very bottom and sell at the very top. So be fine with taking profits. Greed will kill an account. So really just be okay with taking profits. Green is green. Even those 5%, they add up over time, and that is perfectly okay. When it comes to exiting trades, most of the time, I use that scaling method. I scale in thirds, 20% next big resistance, and then a third runners. I have my stop loss set at 10 hard when I enter, and then after 10%, I'll adjust that up to break even, and then 20%, I scale. The rest is at a 10% stop loss, and I keep adjusting up until I really feel comfortable with it. But in terms of that second big scaling spot, right? So in this case on Snap, I would scale when we start to see buyers step in. In this case I'm playing puts. So in this case, say I enter here, I start to see buyers step in here and here, and we're consolidating here. So I'm gonna fully exit there. Alright guys, so now it's time for the announcement. So Adam Silver and I, Commish for short, have been working and came up with some ideas, and we're going to collaborate starting early February in order to really push this options EDU and really try to shorten that learning curve, right? But we also want to do this in like a really fun environment and realize that there's more to life than just trading. So we're going to do that. At this time, I can't announce too much just because we're kind of working out some of those details still. But basically, everything's going to be free of charge. Really focusing on both the lifestyle, the fun side of things, and the overall options EDU. It's a way that we think can really, really help. So, more details on that will be released in about a week or so-ish. But we're going to try and plan for everything to be put together, everything ready by the first or second week, early February. So that's something, we're both really excited for. Commish couldn't join today, but he'll be in at some point, and we'll talk more in detail and get those details out to y'all.